Hey everybody. All right, we're live. We're going to be going over Tesla earnings. I haven't seen them myself yet, but I can see that the stock is going up in after hours. So I'm going to assume they're pretty good. Let's just refresh this. So up $5 in after hours after being up 15 during the day. So let's see it. All right, Q2 Tesla earnings. We have the shareholder deck here. So Q2 update, let's go over this. All right, highlights, cash. So operating cash flow less CapEx. So their free cash flow of $619 million in Q2. Net debt and finance lease repayments of $1.6 billion in Q2. So they're paying down debt, which is really good because less interest payments, which is going to basically lead to more on the bottom line and higher EPS going forward. In total, $912 million decrease in their cash and cash equivalents in Q2. And if you can tell, so $912 million decrease, but the thing is there was a $1.6 billion net debt and finance lease repayments. So they did make more cash. That's why there's cash flow of $619 million. Then profitability, they're showing $1.3 billion in GAAP operating income, 11% operating margin in Q2, $1.1 billion GAAP net income, $1.6 billion non-GAAP net income, excluding stock-based compensation in Q2, 28.4% GAAP automotive gross margins. That's amazing. Gross margins is basically extremely important to be looking at for a company like Tesla. And excluding credits, it was 25.8%. Really, really great. That's, I believe, better than last quarter, which we'll check. But I'm pretty sure it was. Operations. Record vehicle production and deliveries in Q2, successful launch of full self-driving subscription in July, started delivering the new Model S to customers. Summary. In the second quarter of 2021, we broke new and notable records. We produced and delivered over 200,000 vehicles, achieved an operating margin of 11%, and exceeded $1 billion of GAAP net income for the first time in our history. Supply chain challenges, in particular global semiconductor shortages and port congestion, continued to be present in Q2, so they did have some issues with the semiconductor shortages. Tesla team, including supply chain, software development, and our factories, worked extremely hard to keep production running as close to full capacity as possible. With global vehicle demand at record levels, component supply will have strong influence on the rate of delivery growth for the rest of this year. So it's going to be interesting to see what their guidance is later in this. We successfully launched Tesla Vision in Q2, which was mainly possible due to our ability to use data of over 1 million Tesla vehicles to source a large, diverse, and accurate data set. Solving full autonomy is a difficult engineering challenge in which we continue to believe can only be solved through a collection of large, real-world data sets and cutting-edge AI. What they're basically saying there is that no one else is going to be able to solve AI but them, because you can't just do it with simulations, which is what everyone else is relying on since they don't have enough real-world data. Public sentiment and support for electric vehicles seems to be at a never-before-seen inflection point. We continue to work hard to drive down costs and increase our rate of production to make electric vehicles accessible to as many people as possible. So they're basically saying that electric vehicles are more popular than ever, which is great. So let's go into their financial summary. So automotive revenues, if we're looking at Q2 2021, they had over $10 billion in revenue, $10.2 billion in automotive revenue, not total revenue, of which they had $354 million in regulatory credits. So it is winding down from that $518 million. Even though they sold more cars, they're not getting as many credits as before. Their gross profits on it to almost $2.9 billion. And that basically comes out because it's 28.4% margin. Total revenues, $11.958 billion. That's actually more than I was expecting. So a lot of revenue. Total gross profit, $2.88 billion. And let's see, operating expenses. So operating expenses actually went down from last quarter, which is interesting. Obviously higher year over year, but they're doing a lot more now. Income from operations, 1.3, 11% operating margin, so we know that. Let's see what else. We have EPS, GAAP EPS $1.02, which, I mean, look at this, 920% year over year. I mean, profitability, anyone who's been saying that profitability is an issue for them or they're going to need to raise money. I mean, it's clear that that's behind Tesla, and going forward, they're going to be extremely positive on the cash flow and profitability. Let's see. All right, some of the funner things. So total revenue grew 98% year over year in Q2, primarily achieved through substantial growth in vehicle delivery. So obviously their main business still selling vehicles, as well as growth in other parts of the business. Same time, vehicle average selling price declined by 2% year over year as Model S and Model X deliveries were reduced in Q2 due to product updates, and lower average selling prices in China-made vehicles became a larger percentage of the mix. So as you guys probably know, Model S and X is not shipping as much as it used to because they did the refresh, so they're just ramping up the new production and trying to get those delivered. So they have, smaller average selling price declined by just 2%. I actually think we're going to see in the next quarter an increase in the average selling price with all the S and X's getting finally shipped to all the owners who've been waiting so long for them. All right, profitability. So we went over this a little bit before. They're talking about the stock-based compensation expense attributable to the CEO, to Elon Musk, in his award. So once that's gone, that stock-based compensation, I mean, it's just going to increase their profits even more, less things that they have to write off. Cash, quarter-end cash equivalents. So we talked about it decreased because they made payments to reduce their debt, which I am very happy with. There's no reason to have that much cash when you're holding so much debt. You don't need to make the interest payments if they don't need the cash right now. So I think that's pretty good. Let's go over. So we've seen deliveries and production rates from their last report. They already gave us that, so that's nothing new there. We do get some, solar deployed and storage, which solar didn't deploy as much as I'd like to see. It is a decrease from last quarter, but obviously a huge increase from a year ago. You can never look at things in just a 30-day period. The overall picture should be year over year, over multiple years. So they had 215% increase in solar deployed year over year, and storage deployed. So battery storage, 204% increase. These are huge numbers. So it's growing like crazy. I know they're battery constrained. As far as stores and service locations, they're constantly increasing that number every single quarter. No exception here, 34% year over year in more stores and service locations, as well as mobile service fleet, 34% increase. So a lot of mobile service. I've used it myself. I actually prefer it. I think that's more important and makes it so convenient. Supercharger stations, which, basically they're going to own the future gas stations of this world with superchargers. They're going to be opening them soon to all EVs, or at least they're going to be partnering with a few companies. Elon's been hinting about it for a while. So, 46% year over year growth in superchargers. So they are growing superchargers like crazy. They're dropping them everywhere where they're selling cars. I don't think people are going to be worried about where to charge their car pretty soon. Supercharger connectors, so ton of connectors, 49% increase because they're adding more connectors at each station than they used to. Vehicle capacity, so this is pretty important. They're still obviously building out Berlin and Texas. So California and Shanghai, basically in California they have capacity to make 600,000 cars, 500,000 between Model 3 and Model Y, and 100,000 for Model S and Model X. And in Shanghai, they're at more than 450,000 for 3 and Y. Obviously, we're going to see a lot in Model Y production in Berlin and Texas. They're going to be making the Cybertruck in Texas. And they haven't announced where they're going to make the Semi, the Roadster, and future products, so the Model 2. So that's all in development. I'm sure we'll get maybe some of this information next quarter because the Cybertruck should be coming. We might hear about it in the earnings report. He has said in the past, unless it says it's something in here, he might mention it on the earnings call, that Cybertruck should be coming the end of this year, if not the end of this year, early 2022. So basically, he's letting everyone know global demand continues to be robust. They don't see basically demand issues. It's really just a supply production constrained issue with being able to sell more cars. They just don't have it in any other cars, and they have to build the factories to make them. So the semiconductor supply, besides batteries, semiconductor supply chain issues are still going on, but they are, even with those, able to grow production regardless of these issues. So California, Texas, Production map for Model S progressed over the course of Q2. We expect it will continue to increase throughout the rest of the year given strong U.S. demand. The majority of all Model 3 and Y production was delivered in North America, which is great because the closer it is, the more money they make. They don't have to ship it as far. It doesn't take as long to get there. They can deliver more cars. So for production in the U.S. to get them all out in North America is important. Build out of Gigafactory Texas continued to progress in Q2 with commissioning having begun in some of the areas of the factory. Okay. China, Shanghai. So while we experienced minor interruptions due to supply chain challenges and factory upgrades, so they've been upgrading the factory so that it can produce more vehicles, production in Shanghai remains strong. Per our planned roadmap, we recently introduced a standard range of the Model Y in China, which starts at 276,000 yen post-incentives. Due to strong U.S. demand and global average cost optimization, we have completed the transition of Gigafactory Shanghai as the primary vehicle export hub. So super important, instead of shipping cars to Europe from the United States, they're shipping cars from Shanghai to Europe, which it just makes sense. They make the cars cheaper there. And I'm not 100%, but I believe it's less taxes to send them in, duties, than it is from the US. So Europe, let's get an update for their Berlin factory. While our global production lines continue to run as fast as possible, European demand remains well above supply, resulting in growing wait times for delivery. We continue installing equipment, have begun testing tools, and are working as quickly as possible towards starting production in Berlin, while growing import volumes. So market share of Tesla vehicles by region. As you can see, they're showing, this is a pretty clear picture that their market share is increasing every single quarter. And as production grows, they'll be able to ship more cars, and I believe they're just going to continue to take more and more market share. And this market share is light-duty vehicles, all vehicles. This isn't just EVs, obviously. That's why it's only a little over 1.5%. If we go down core technology, obviously self-driving is a huge, important feature to Elon Musk. He is not playing around with it. He's been going very hard with Tesla Vision. He got rid of radar. He wants to make a camera-only system that within, basically the same way humans do things. We have eyes, which are our cameras. We have a brain to understand what we see and make decisions. So they have, their brain is the FSD chip, and their eyes are the cameras all around the car. So autopilot and full self-driving. After selling over 1 million vehicles equipped with radar, we have collected enough data to start removing it in some regions. The removal of radar, which is enabled by our collection of vast data set of corner cases, allows us to focus on vision and increase the pace of improvement. Our first customers downloaded FSD version 9 beta in July, prompting strong positive feedback from current users. Vehicle software. Our team has demonstrated an unparalleled ability to reach quickly and mitigate disruptions to manufacturing caused by the semiconductor shortages. Our electrical and firmware engineering teams remain hard at work designing, developing, and validating 19 new variants of controllers in response to ongoing semiconductor shortages. So they're doing things that other car makers I don't think are doing, which is they're basically finding other types of chips that weren't meant to be the semiconductor initially for whatever they're using it for, and they're making it work through their hardware and software teams. They are making, adapting to make sure that they have what they need to keep producing and shipping cars. As far as their battery and powertrain, we've successfully validated performance and lifetime of our 4680 cells produced. I'm just going to stop there and say I'm very happy to see this because there's been a lot of questions about how is the 4680 cells that they showed off on Battery Day going, and are they actually working, or are there issues with them? And saying that they successfully validated the performance and the lifetime of them is already a huge win for Tesla at our Kato facility in California. So that's their test facility, basically. To me, it's a lot more than a test facility. They're actually producing a lot of batteries there now. We're nearing the end of manufacturing validation at Kato. Field quality and yield are at viable levels, and our focus is now on improving the 10% of manufacturing processes that currently bottleneck production output. While substantial progress has been made, we still have work ahead of us before we can achieve volume production. Internal crash testing of our structural pack architecture with a single piece front casting has been successful. So that's good news. As you can see in some of these photos, aftermarket, I'm just going to read some of the comments before we keep going. Aftermarket didn't react much. So where's it at in aftermarket? Let's see. Yeah, so it's up $7. We had a 2.2% up day, so up 14, up another 7. Not as much up as I'd like it to see. I'd like to see it, but definitely happy it's going up versus going down. So, and it's not easy to move the price for a company that's so big. It takes time and a lot of fun money. That is true. This company is over $600 billion. Right now it's sitting market cap $633 billion. So you need a lot of money to move a stock that big. It's not, I don't think we're going to see as often the days like we used to where you get 20% jumps on Tesla on earnings. I think those days are behind us for the most part in any single day. But the good thing is good earnings mean, for the next 3 months, hopefully, barring anything crazy from happening, I think next earnings are going to be better than these earnings, and fourth quarter is always the best earnings. So I think we have a nice road ahead. So let's keep moving forward. So other highlights, let's see, energy storage. Energy storage deployments more than tripled year over year, so amazing. Q2 driven mainly by recognition of several megapack projects, which are the really big projects rather than some at-home power walls. The megapacks are for huge utility projects. Energy storage deployments can vary meaningfully quarter to quarter depending on the timing of the specific project milestones. Powerwalls remain exceptionally popular as deployments nearly doubled year over year. That's really important too because Powerwalls, from my understanding, Elon said he's not going to let people buy Powerwalls anymore unless they're also buying solar and they come together. I could be wrong, but I believe that's what he said. So it should start to increase. I know people love Powerwalls and they've been supply constrained on them. So I think that will help increase solar as well. Every storage production continues to be held back by supply chain challenges as our backlog remains long. So I know they have a very long backlog. Elon mentioned it actually in his court case recently that they have a ridiculously long backlog. Tesla energy storage deployments in gigawatt hours. So obviously, it's sporadic because like you said in here, the projects vary, like the timing of them. So you can sign a deal and, it takes X amount of time to finalize. But basically, the trend is upward, and it's clear that it's an important part of the business. Elon has said multiple times before he expects that down the road, talking long term, he thinks the energy side will be equally as big as the auto side. So there's a lot of growth ahead. Solar retrofit and solar roof. Solar deployments reached 85 megawatts in Q2, more than tripling year over year. Additionally, cash loan solar deployments more than quadrupled year over year. Solar roof deployments grew substantially both year over year as well as sequentially in Q2. Thus far, our solar plus storage product remains very popular, and we continue to improve efficiency of our install crews. Market crash just to get more money in Tesla with discount. I hear you. I'm always happy when the long-term thesis is intact and the stock goes down. It's always a good day to add more shares. So basically, solar retrofit, solar roof. So actually, what I didn't realize when I was reading up there is, although solar is down, it's probably because they're focusing a lot more on solar roof versus just solar panels. So that's why I believe it's obviously up year over year, but I meant sequentially the all solar, if we go up, let me just make sure I was saying that right. Solar deployed. Yeah, so sequentially it was 92 megawatts to 85. So it was down, but what did increase sequentially was solar roof, which is what I think he's focusing more on, getting that popular. And services and other gross margins of the services and other business reached nearly break even in Q2, the best result in 4 years, which is awesome. This improvement was driven mainly by strong performance in used vehicles, as well as our continued focus on cost efficiency. So, services finally starting to get, hit break even. I'm sure we're going to see that, cross over and start to be a profitable part of the business and eventually be very profitable. For other automakers, it's, obviously you don't have as much service and things on a Tesla as you would a ICE car, but it's a very profitable part of other automakers' businesses. So I expect it to still be a profitable business going forward for Tesla. So the outlook, this is really important. Volume. We plan to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. In some years, we may grow faster, which we expect to be the case in 2021. The rate of growth will depend on our equipment capacity, operational efficiency, and the capacity and stability of the supply chain. So basically reiterating exactly what they said last quarter pretty much, which is over a long period of time, multiple years, they're going to grow at average 50%, and they'll grow more than 50% this year and probably next year, which Elon said, through 2030 expects eventually 20 million cars. And if you do 50% a year, every year from 2020 is 500,000 till 2029, you get to basically 20 million cars. So they're just reiterating very long-term guidance rather than talking about what's going to happen in quarter three. And I think that's better to keep management and everyone aware of this is a long-term game. This isn't about what happens in the next 90 days. So cash, they have sufficient liquidity to fund their product roadmap, long-term capacity expansion plans, and other expenses. In other words, they don't need to raise money. A lot of bears keep saying, oh, they're going to have to raise money again. Will the markets be able to, accept that? They don't have to raise money. They are cash flow positive. Profit, we expect our operating margin will continue to grow over time, continuing to reach industry-leading levels with capacity expansion and localization plans underway. So as they make factories in Europe and those cars are being delivered and they don't have to ship them from China or ship them from the US, their margins will just continuously get better. And each factory is a improvement upon the last factory. Elon Musk has made that clear a bunch of times that their biggest product they make is the factory itself, and it's constantly improving. So it just gets better and costs less to make each one, and basically going to increase their profits. So the product. We believe we remain on track to build our first Model Y vehicles in Berlin and Austin in 2021, which is amazing. Pace of the respective production ramps will be influenced by the successful introduction of many new products and manufacturing technologies, ongoing supply chain related challenges, and regional permitting. So I know they've been having some issues with getting permits, and they wish that process was a lot faster than it currently is. But an important thing out of this sentence that I look at is about new product and manufacturing technologies. Like I was saying, they constantly are improving their technologies. And when you do that, there are times where you try something that's never been done, and sometimes it works and sometimes it doesn't. So it could, it's always possible it could hold them up. But when it does work, they're making huge improvements, and they're doing things other automakers just aren't doing. To better focus on these factories and due to the limited availability of battery cells and global supply chain challenges, we have shifted the launch of the semi-truck program to 2022. So they are pushing the semis to 2022 rather than 2021. I think it's important that they just want to focus on getting Model Y ramped and getting these factories up and running, and doing semi at the same time might be a little bit too much of a distraction. That said, the semi-trucks need a ton of batteries. And my guess, they haven't confirmed it, but my guess is the semis need the 4680 batteries, and they're just not scaled to the point where they can put them in them yet, I think. So that's my guess on why they're holding that off. We're also making progress on the industrialization of Cybertruck, which is currently planned for Austin production subsequent to Model Y. So they're not reiterating that Cybertruck will come at the end of the year. My guess is next quarter we're going to see that they're going to say it's coming 2022. I was expecting 2022, to be honest anyways. I think their idea is just get the Model Y. They have tons of orders for Model Y in Europe, and they need that production up and running. So I think their idea is get that Model Y produced as quick as possible. Once that production is getting ramped and they can kind of let those deliveries run smoothly, then they can push Cybertruck there, and it makes sense to me. So they always put photos. They're just basically showing the progress. I love it because you look at all these other EV makers and they're basically like, oh, they're building a factory, and you see 6 months later and it's just a bunch of dirt on the ground with no factory. So Tesla's the one company that really is pushing the boundaries more than anyone. So Berlin factory, this thing is pretty much built. It's looking great. Let's see inside it, the paint shop. Clearly, I know Elon's talked about this paint shop being next level. They're going to have really high quality coatings and whatnot. So in a couple, I believe, exclusive colors that they're going to be doing out of here. I know he has a custom red color that he has in his personal Model S. I don't know where he got it painted or whatnot, but I believe it's going to be coming out of Berlin. Let's see, Texas. So Texas is being built. I mean, this is 6 months ago, as you can see, to present day. I mean, what a difference they've done already in the last 6 months. And stamping press. So these things are sick from IDRA. These things are they're insane. The giga presses. Let's see what else we got. The body shop in Texas. So I mean, this is pretty far ahead than, it's actually got more equipment in it than I actually thought they had in Texas already. I know I've seen them bringing equipment in, but I mean, these are car bodies in here. They're clearly starting test production or whatnot. I mean, it looks ahead of what I thought it was. So I like to see that. Progress is definitely going forward. Model Y factory construction. Nice. Got everybody there. Shanghai, Shanghai's a beast. It's scaled so fast. They built this factory so quick. They're constantly expanding on it. It's humongous. For those that don't know, they are the only auto company that owns a factory 100% themselves. Only U.S. company to own a factory in China 100%. They don't share any ownership with the Chinese government. No one else has got permission to do that before. They're the only ones. So really important. Key metrics quarterly. So this really puts things into perspective when you look at these things. Basically vehicle deliveries, it's clearly an uptrend. I mean, it's obvious they're growing at insane rates. And this is only from 2018. I mean, if we went back to 2015 and showed it, it's just insane how they're ramping. Operating cash flow, free cash flow, as you can see, they constantly have had, people say they're going to have to raise money. I mean, 1, 2, 3, 4, 5 quarters in a row of positive free cash flow, positive operating cash flow. I mean, and this is while they're ramping and building factories. Ramping factories they have and building new ones, and yet free cash flow positive. So don't think they're going to have to raise any money. Net income, I mean, this speaks for itself as well. The blue line is net income. As you can see, it's literally just ramping up as FSD gets better. They're doing the subscriptions now. They're going to eventually have the App Store. More and more people using supercharger networks. Service ramping up and getting profitability. More and more battery storage. I mean, more and more deliveries when the new factories come out. This is just going to be an exponential rise right here. I think they're going to be doing really, really well. Trailing 12 months. So this is even better than looking at quarterly. You get a much longer view. So, still same time, but this is showing 12 months combined. The last 12 months from each quarter, if you combine them, what it looks like, the trailing 12 months. So, I mean, we've already passed 700,000 vehicles. If you did the last 12 months, how many vehicles they delivered. And this is peaking. I think we're going to have in 2021, if I had to take a guess right now, I think we're going to have between 900,000 and 1 million vehicles delivered. I'm going for 950,000 vehicles. I'm going to say 950,000 vehicles. That's what I'm going to say is delivered in 2021 combined. That's my guess. Operating cash flow, like I said, free cash flow. I mean, if you look at the 12 months combined, we're talking about over $4 billion in free cash flow over the last 12 months. And it's $4 billion. That's a lot of money. They're not going to need to raise money. Net income, literally net income. Free cash flow, by the way, is more important than net income. Free cash flow is really what I like to look at more than net income, because you can play with net income a lot easier than you can play with free cash flow. But even net income over $2 billion, I mean, it's really great. So we're not going to go through all of this right now, but basically most of it, the important things we've already spoke about. We'll just look at, balance sheet. We've talked about it, but they mentioned their cash above before, 16 billion. What I do want to show is, because they did pay some debt, so let's see what they have here. And customer deposits. They have, where is it? Customer deposits, $812 million in customer deposits right now. And that number is, up from last quarter. So let's see. Debt and finance lease net current portions. So look at this. They had $9 billion in, current portion of debt and finance leases, down to $7.8 billion. total liabilities, other long-term liabilities here. So long-term liabilities is actually slightly higher. They basically brought that down. Let's see, total liabilities and equity. So higher liabilities, but the increase 5292 55146. Total assets and total liabilities are showing exactly the same number, which is a little strange. Liabilities and equity. Total debt excluding vehicle and energy product financing. Okay, this is what I wanted to see. 5.11 billion to 3.991 billion. So they're paying off the debt. Like I said before, that's super important because this isn't a small number, 5 billion, even 3.9 billion, so that's 6 billion, used to be 8 billion, 8.5 billion. They've been paying off the debt. And why that's important is when you have interest payments on $8.5 billion, those interest payments, even at a low percentage, is a huge amount of money. We're talking about hundreds of millions of dollars that they pay. So, when a company's only making a few $100 million in free cash flow in the quarter, when you add a few $100 million back that you would save on interest payments, it's a no-brainer, especially when you have the cash. They have $16 billion in cash, so more than $16 billion. So I like that they're paying the debt down. And that's another point of why people think that they're going to raise more money. They're paying their debt down. If they wanted to have more cash and they just wouldn't pay their debt down, they'd keep the cash. And, just like they could go get more debt now, they're not. They're paying the debt down. So that's pretty important. Let's see. Cash flow, reconciliation. So we went through that. So that's basically, those are the important parts of the earnings. I really liked it. I think that it was a really successful another quarter, more successful than I actually thought it would be. Let's see where the stock's at. Let's refresh this. 665 right now. So basically it's hovering around there. But yeah, definitely want to know what you guys think of the stock. If you own it, if you're buying it, where you think it belongs. But the earnings call, I think, is at 5:30ish. It's 4:45 right now, so I'm definitely going to hop on for the earnings call. What I want to show you before we leave is the questions for the earnings call, just so you guys can see. Tesla works with, a lot of companies are now working with this company, Say, where any shareholder can basically write a question, throw it on the website, and people can upvote it with their shares, and their shares get put into it. So let's just see what the most amount of shares are voting for, because Elon will probably answer these questions on the earnings call. Tesla's website still says Cybertruck production is expected to begin in late 2021. Can Tesla share more details on the current status of Cybertruck and confirm production is still expected in 2021? To me, this isn't a great question for us to be asking, because the truth is, based on what that earnings report says, I'm sure this person put this in before we got the earnings report, but we pretty much know the answer. It's going to be 2022, so why waste a question on it? There's a lot of other information we could be getting. Elon has said that Tesla will be opening the supercharger network to other EVs later this year. Can you share more details on how this will be structured? Will this be select brands? Will it continue to the growth of the network? So I think that's actually a pretty good question. I like that one. Hopefully we can get some more color on it. He might just say we're going to have a press release about it later, or he can't talk about it right now. But, you never know. He might give us some real answers on that. I like that question. From my understanding, I don't know if it was him or other people just speculated about it, but I believe that people will need to buy an adapter. If you don't have a Tesla, you'll probably have to buy an adapter from Tesla's website, and then you'll have to download the Tesla app in your phone. So you're going to have people who don't own Teslas having their Tesla app on their phone so they can use the supercharger network. I'm curious to know, it wasn't in this question, but will someone who's not a Tesla driver who pulls up to the supercharger network, will he be charged a different rate than a Tesla owner? That's what I'm curious to know. Hello, thanks for joining in, Christian. Let's see, the next question. Elon said 4680 cells aren't reliable enough for vehicles. Is this referring to cycle life degradation or something else? Please update us on the progress of 4680s and what still needs to be done to make them reliable enough for vehicles. So he actually kind of answered some of that in the earnings report. They've done some testing and validation. I think it's not about reliability at all anymore. I think what it is he mentioned that there's still bottlenecks to producing it in high volume. So I think the cells are actually fine and passed all the tests that they wanted them to. It's just there are certain things in producing them that take a long time, and they're trying to figure out how to speed it up, because unless they can speed it up and ramp it, it's all about, it's like a factory making, soda cans and whatnot, in bottles of Coca-Cola. It's about speed. They need this, he talked about it on Battery Day, but it's about getting as many out. The more you can make per, minute or whatever, it drops the cost of each battery by a lot. So I think it's about speed rather than reliability. So next was, can Elon do an interview with one of YouTube channels once or twice a year? Can Elon do an interview with one of our YouTube channels once or twice a year? I would nominate Dave Lee on Investing, great channel for Tesla if you want to hear about FSD and whatnot. Rob Maurer's Tesla Daily. I love Rob Maurer's Tesla Daily. Great content. He puts out Tesla content every day of the week. That's why it's Tesla Daily. And now he's also working for The Street with Jim Cramer. Channels as first possible candidates. Yeah, I mean, I'm open. If Elon wants to hop on my channel, I won't say no. But yeah, if he's going to hop on anyone's, honestly, I think Rob Maurer is the guy. Dave Lee, nothing against him. I want to see him on both. They're both, I love both channels. Definitely a little different. Dave Lee's longer videos really gets into things, which would be great with Elon Musk too. I know Elon Musk doesn't have a lot of time on interviews. I've seen a few videos he's done, and he gave Joe Rogan the most amount of time, but like MKBHD did a video with. They just didn't have too much time. Let's see, the next thing. Last quarter, you suggested that for 2022, you were on track for 100 gigawatt hours of in-house battery production. You also anticipated purchasing a similar amount from third-party suppliers. Would this represent your current best estimate for 2022 battery supply? So another question that kind of goes back to the 4680 cells. It would be a good indicator if he thinks that they can still get it done by 2022, 100 gigawatt hours. Because if he can, then he's basically saying that whatever that 10% of the processes that are basically limiting how fast they can make them, the bottlenecks, he basically sees that if he says yes to this, that they'll still have 100 gigawatt hours. He basically sees that they're not big enough issues that it's going to hold them back, that they're going to solve those issues fairly soon. So not a bad question. Semi, and this is, all right, so semi is very important to progress of Tesla's mission. What are your plans for it? 21, so this was actually already answered. It's going to be in 2022. When do you expect to hit volume production? What are the biggest challenges at the moment? So, I mean, honestly, waste of a question. I can answer this. 2022, we saw that in the earnings, and biggest challenges is battery constraint. I mean, he says it literally every earnings report. So they're going to be battery constrained. This semi is a huge vehicle. It needs a ton of batteries, and they don't have the battery. Every time if they decided to make a semi today, they're taking away from making multiple Model 3s, for example, and they rather sell get as many robo-taxis basically on the road as possible. Helps train the self-driving system quicker, and it's just helps the overall mission more than putting out semis today. I think it's all about battery constraints. Is there any progression on Tesla auto insurance expanding outside of California? This question is asked every earnings report, and they make jokes about it every earnings report that they know they're going to get a question about auto insurance. I don't know if he's going to answer this many questions and get to it, but auto insurance, I'm hoping that they have some progress and have some comments to make about it. I think that's a huge business for Tesla to get into. I know in California they're working with an auto insurance company, I believe, but I know that he said that they're basically going to leverage the data of every driver because they can see how you drive, and then they can charge you accordingly. And he's mentioned that if you use FSD more, then they'll charge you less because you're letting their system drive more of the time. If you're not driving crazy, you won't be charged as much. And they believe that with their data, they have an advantage to be able to price to perfection and charge cheaper than anyone else because they know more about you. Or if it was more, it's because you're, I guess, a aggressive driver and other people don't know it about you yet. But they believe that they're basically going to have something that other insurance companies won't have an advantage. And that could be a huge, huge business for them. So Tesla Energy appears to be, before I keep continuing going down this, because A lot of it's probably going to be the same. Let's see what institutional questions came in. So these are retail questions that regular people that own shares of Tesla could ask, and then retail investors can vote on them. And then institutional questions, which all the big institutions can ask. Let's see what they asked. All right. Can you please update us on timelines for start of production of Berlin and Austin Model Y? So they already did that in the earnings. It's coming late 2021 for Model Y. Cybertruck, they don't seem to want to answer. My guess 2022. Tesla Semi, they answered 2022. Do you expect the ramp of Cybertruck to be difficult as it's a new process? So that will be a good one for them, I guess, to ask and answer. Will it be difficult? Making Cybertruck is unlike making anything else. So I know, my guess is Elon's going to say, like, there's new technologies and new processes of making the Cybertruck. So like any new vehicle with new processes, there could be unforeseen challenges, but basically they don't see anything that's going to stop them, is my guess, is how he's going to answer that. But it's not going to be until 2022, in my opinion. So we won't know until they start. That's the bottom line, I think. Given the challenges with global supply chains, is Tesla still on target to manufacture 100 gigawatt hours worth of 4680 cells in 2022? Same question in the retail question, so we've already went over that. Let's see. We got, what are the key manufacturing challenges Cybertruck still has to address before production can begin? Same as the first question. How long after Austin is completed do you expect to begin production? Okay. So Austin Model Y, I think he said, was 2021. So I don't know if it was just Berlin or Austin. I feel like it was Austin. Well, it's all right. Let's go back anyways. In 5 years' time, how much faster and better could you be at manufacturing capacity expansion, cut, paste, and what are the biggest issues you need to solve to get to that rate? So this is an interesting question. So Elon Musk has talked about that rather than making, in one of the, I forget where he said it, but he said at one point that you would need 100, I think it was at Battery Day, you would need 100 Gigafactory Nevadas to get to turn the world off of regular energy and into renewable energy for battery production. So they talked about, instead of making the Gigafactory Nevadas, they want to make terafactories, and basically not as many factories, so you won't have to do a lot of cut and paste factory, like basically you make a factory and then you just keep making it over and over again. I think each factory is going to get better and better, so it's not going to be exactly cut and paste, and I think each factory is going to be bigger and bigger, or around the same size, but much larger than the original factories. That's why Shanghai and Austin is massive in comparison. It's I forget how many acres. It's ridiculous how big Austin's factory is. So I think that they're really just looking at, look, let's not get as many factories as we originally planned. Let's get much larger factories. But this will be interesting to see how they answer it. Does Tesla plan to offer more services beyond FSD or high-speed connectivity as part of its subscription bundle going forward? What areas in particular present an opportunity? So, he might give some stuff, but a lot of times when you ask about like products or services that they've never talked about before, they kind of just say like, earnings. Elon Musk loves to say like earnings calls are not, the right place for product announcements. So I wouldn't, I would expect an answer like that. But my guess is, of course, are they going to offer more subscription things? Yeah, they can add into your subscription insurance. They can add into your subscription some kind of online game pass for the video games, that they're going to be putting into the cars. We saw they were showing off really great gaming capabilities with the new S and X, and how it has the same chip that's in the PS5 for gaming. So, there's definitely a lot of things they're going to get into, I'm sure. How do data collection regulations challenges in China impact FSD product development for domestic China products? So, I don't think he's going to talk badly about China on the earnings report, that's for sure, or anything. So my guess is he's going to say, there's no issue that they're developing FSD over there, and that they have to keep the data stored in China. They can't store it in the U.S. I think that's what Chinese government told them, and that's what they're doing. So it is what it is. Let's see. Can we please share an updated view on what would be the key obstacles to overcome and how can we solve them on our path to launch a feature-complete FSD that is level 4+. So this is basically feature-complete FSD. One, he's going to say, like, they basically are feature-complete with FSD Beta v9. They are feature-complete. It's just about getting the, it can't just be 99.9% of the time, work. It has to be 99.999999. It's every one of those extra nines that they're really working on. There's no, level 2, level 3, level 4. It's you're either self-driving or you're not. And that's the way I look at it. That's the way Elon Musk has looked at it. And I think that they're just going to keep pushing that. So I think he's going to say that they are feature complete, that it's just about getting that extra row of nines, and the only way to do that is with constant fleet learning. That the more cars they have, the more data they pick up, the more that data basically trains their neural nets, and the more that the neural nets are trained, it resends it back to the fleet, and it's just a constant circle of upgrading the systems and making the brain of the car smarter and smarter. So yeah, I mean, I don't think he's going to be answering any questions below that. He does a couple questions, retail, a couple institutional. But yeah, I mean, if there's anything you guys want to see before I jump off, I'm happy to answer any questions or jump, look into anything. But I think we really went over everything for the earnings report, went over everything for the say questions. So I'm excited for the earnings call. I don't know about you guys. I think it's going to be in like 30 minutes from now. See if it says it on their website. So here, listen, let's see where it is. Oh yeah, 5:30 p.m. So it's going to be awesome. I'm going to definitely jump on. So we got about 30 minutes. So I'm not going to keep you guys just sitting here for 30 minutes waiting until we hear this. But if any of you do have questions, you can always throw it in the comments and I'll answer them as soon as the earnings call is done if I don't see them beforehand. Thanks so much for jumping on. I really appreciate you guys coming live with me. Today was the first day we actually went live this morning, and we're going to go live tomorrow morning at 8 a.m. for Logitech earnings. I own personally a lot of shares of Corsair, so I'm looking at Logitech to see how the industry is doing, and I think we might see a big move, hopefully, for Logitech and Corsair tomorrow. I don't own any Logitech, but should be interesting. So look forward to it. Hope you guys can join me tomorrow. It's going to be 8 a.m. that we're doing the live stream, 8 a.m. Eastern time. And yeah, I appreciate you all again. Here, will you stream Corsair earnings next week? Of course, that's definitely my plan. I wouldn't miss it. So we're going to stream Corsair earnings unless have to check everything, but unless some unforeseen events, I will be streaming Corsair earnings, hopefully. So, yeah. Again, appreciate you all. Thank you so much for joining me, and I'll see you guys.